Hi there, welcome to kneppyinvest. Every time we get into Appendix 4C season, so we are in that month now, I have a piece of paper, and whenever a company releases their quarterly report, I do write down the company and the date, and then for the September quarterlies, I actually went down the list of all companies that did release the quarterly report, and I decided to do a video on a select few of those companies in order of which they released their Appendix 4C. Not quite exactly in the order, but I got down to a company called Raise. That was the next company on the to-do list, 360. And then the third company on the to-do list was the company I'll be featuring in this video, DataDot or DataDot. Now, I also got an email from John in regards to this company. So I thought because this was third on the list, and I did receive an email, I thought I'd do a video on this company because it is small and it is profitable. So let's get stuck into it and talk about what exactly DataDot Technologies actually do. DataDot provides world-leading asset identification, protection, and authentication solutions to combat theft and counterfeiting. I couldn't put it any better myself. That isn't in my words. That is straight from the company website. So there are two main pieces of the technology, DataDot DNA, which is a theft deterrent system, and Data Trace DNA for authentication. I'm really just going to concentrate on the DataDot DNA, which is all about theft deterrent system. So it's all about applying an ID to an asset through a canister of metallic data dots that have a unique ID. And it also allows assets to be uniquely marked and identified, sort of like a VIN, so a vehicle identification number. But thieves have a way to get around a lot of those traditional forms of identification, and DataDot want to solve those problems. The next step is to communicate the initiative. So that means having some sort of message on any piece of asset that has this DataDot technology, which deters would-be thieves from even thinking about criminal activities or theft. And the third step is law enforcement and scrap recycler education. So this is teaching law enforcement all about this piece of technology. DataDot were formed in 2000. Now, on their website, a lot of times you'll see a company have an about section on their website and then a history of the company. DataDot didn't really have that, but I did find somewhere that they were founded in 2000 and they listed on the ASX in January 2005. And this actually did surprise me. I didn't realize this company has been around for a long time on the ASX, and I actually went back to January 2005 to see if it was DataDot Technology or maybe this was a backdoor listing, but it was DataDot Technology. Had a look at their admission announcement and actually was called DataDot Technology. So this company has been on the ASX for 16, almost 17 years now. Yeah, 17 years because it is 2022. The managing director is Brad Kellis, and he also has a 13.7% holding in this company. Haven't done any research in management, whether there's been a large turnover in management over the last 17 years, because this company has not been successful in the 17 years it has been a listed company. So when a company hasn't been successful for 17 years, more than likely there will be a bit of a management turnover. And I think Brad Kellis, if I remember correctly, has been with DataDot Technology for maybe 2 years. But there's a little bit of skin in the game there, which is good. And two of the major shareholders are shareholders I've never heard of before: Appwam, which has 12.1% stake, and Patrick's 7.9%. I couldn't find any information on Patrick's, but I did find some information on Appwam. Seems like it's sort of a fund that invests in small or micro-cap companies. And DataDot Technologies is one of the biggest holdings. I think Pure Profile is another one of the big holdings. The market cap for DataDot Technologies right now at 1.1 cent is only $14 million. And that is low, but this company is profitable. But in saying it is profitable, when you look at the revenue, which I'll be showing you later in this video, over the past 15 years or 17 years since they've listed, it doesn't look very good, and that's also applies to the chart, a really bad looking chart over the past 17 years. And the ticker code for this company is DDT. Now let's look at some of the financials of DataDot Technologies, comparing the most recent financial year to the financial year previous to this. I was thinking of comparing the most recent financial year to 10 years ago to see how this company has performed over the past 10 years. But we'll have a look at the 15-year financial history, revenue, operational cash flow later in this video. So you can just see how this company has performed over the past 10 years. Revenue did increase 3.8 million to 3.9 million. And one of the things I'm not liking about this company is just the lack of growth in revenue. In fact, revenue has fallen away over the last 15 years, but there is potential that could be turning around in the last few years. Gross margins are up from 58% to 64%, which is a good thing. And more importantly, and the most important thing maybe, is DataDot Technology is operational cash flow positive and profitable in financial year 21 by over $1 million. Operational cash flow positive, 1.4 million, a significant improvement from financial year 20, which was only 0.5 million, and profitable by 1.3 million, which was 6 times more than financial year 20. They have about $2 million in net cash, and that is growing because they are operational cash flow positive and they don't spend much money in investing and financing activities. So all the money they do produce in operations goes to the bottom line. Price to sales ratio, 3.6. So you'll see possible value when you look at some of these valuation metrics. That seems okay. Price to operating cash flow at 10. So that's right on the range I probably would expect. But if you do see this getting to like 5 or 4, there could be some good value. And the way you could get to 4 or 5 is not just by the share price dropping, but by the operational cash flow starting to grow from here on in. And the PE ratio right now, not too high, not too low at 11. Now, one of the main reasons I decided to do this video on DataDot Technology was because they were on my Appendix 4C September quarter list, and they were one of the companies that I was going to do soon. And then I received that email from John. So one of the whole points of me doing this video was to look at the September 21 quarter report. And before we get there, I just want to go back in time to look at the same quarter report from 1 year ago and just to see and compare how this company has grown or not grown over the past year. Now, receipts and customers only $1.2 million, which is not too high, but this company doesn't spend a lot of money. Product manufacturing and operating costs only $470,000, staff costs $178,000, administration costs $154,000, and advertising and marketing only $4,000. So because they don't spend a lot of money, and even though receipts and customers does seem low at 1.2 million, DataDot Technologies 1 year ago was operational cash flow positive by 421,000. And all that operational cash flow went down to the bottom line because this company doesn't spend any money on investing and financing activities. So the cash on hand grew from 1 million to 1.4 million. As we move to the most recent Appendix 4C, which was released in October for the September 2021 quarter, receipts and customers actually fell to 1.1 million. This is a main feature of DataDot Technologies. I found that receipts aren't growing or revenue is not growing all that much. Now, some of the costs actually did increase during or from last year to this year, but only slightly. And because that only slightly increased and receipts from customers only slightly decreased, it still meant that DataDot Technologies was operational cash flow positive for the quarter by $240,000. And because they were operational cash flow positive during the whole of the last year, that meant the cash on hand actually grew by $200,000 to $2.5 million. So over the past year, the company has grown their cash because this company is operational cash flow positive. And if they can continue on this trajectory, that cash on hand will grow over time. Maybe slowly, but it definitely will grow. So if this company doesn't make any major changes to their business model, we'll just see their cash grow on hand, and potentially they might make some acquisitions, might spend a little bit more money in research and development, that sort of thing, to try and grow in the future. Now, I may have mentioned this before, or maybe not, is one of the things that is not quite enticing about DataDot Technologies is a lack of growth at the moment. And this is their receipts history going back to December quarter 2019. So we have 8 quarters of history here, which is my preferred amount of quarters to determine whether there's any trend. And without doubt, there is not much of a trend here. In fact, if you take the start point and the end point, nothing has changed at all. From $1.1 million in that December quarter 2019 to $1.1 million in the most recent quarter. But those 2 quarters are the second or the third and the fourth best performing quarters. But no trend at all when we look at the receipts history for DataDot Technology. So even though they are operational cash flow positive, they are profitable, I would prefer to see some growth in their receipts and also their revenue. And when we look at the financial history for DataDot Technologies, going all the way back to, this goes back to 2005, so this includes their whole history on the ASX, it does not look good. Revenue has been consistently falling during this period of time. In fact, their record year was way back in 2007, so that's just before the GFC, where they recorded $11.8 million in revenue. And it's actually at that point in time, it did look good because revenue had almost doubled, actually more than doubled over the previous 2 years. But from that high of $11.8 million of revenue back in 2007, revenue has been consistently falling for this company. But in saying that, there is maybe some light at the end of the tunnel because revenue actually has climbed over the past 3 years, reaching a bottom of 3.28 million in 2019 and has grown to 3.9 million. The other thing is, if you look at cash flow from operations, so this chart includes revenue and cash flow from operations, you can see it fluctuating from being operational cash flow positive to negative. In the most recent year, they were operational cash flow positive by $1.3 million, which was their second best year. The previous best year was way back in 2010 when they're operational cash flow positive by 1.8 million. So even though revenue has been falling through their history, particularly from 2007, maybe things are turning around for this company based off the last 3 years. And because they've curbed a lot of their costs are low, even though the revenue is fairly low at $3.9 million, a lot of that revenue does go down to the bottom line into operational cash flow. And that's why this company is looking slightly attractive just based off the fact they are profitable, operating cash flow positive, and potentially growing at an albeit slow rate. Let's have a look at DataDot Technology's chart. This is the weekly chart going back to 2011, so 10 years of history here, or just over 10 years now. I keep forgetting we're in 2022. I did originally want to take it all the way back to 2005, but the chart looked fairly ugly because back in 2005, 2006, share price reached a high of 31 cents. And then from that high of 31 cents, the share price has just been in a long-term downtrend. There's been little blips where it looked like the share price wanted to break out back in 2014. We did see the share price rise from about 2 cents to a high of about 5 cents in a very short period of time, but that potential breakout failed. But in saying that, over the past 2 years, the share price has been consolidating, particularly between the start of 2019 to the start of 2011. Share price was moving between about 0.4 cents and about 1 cent. But it does look like over the past 6 to 8 months, the share price might be breaking out. So a little bit more excitement in the market around this company. Maybe it's because it is profitable, operational cash flow positive, and even though revenue is growing at a very slow rate, it's just those few things could be pushing a little bit more excitement into the market around this company. And the other way we can see the increased excitement is just looking at the volume over the past 10 years. Between 2011 and 2014, a very little volume, which is telling us the market's not exciting. And during that period, we did see the share price fall a lot. So when you have no excitement, the share price is liable to drop a fair bit. And when there was that potential breakout 2014, which did fail, that's when we did see a peak in volume. And then as the share price fell from about 2015 to 2019 again, there was a period where there was low volume. But volume has started to climb over the past 18 months. The market is getting a little bit more excited about this company. And in these sort of situations, I want to listen to what the market is saying, because the market eventually is what will drive the share price of this company higher. And the way the market gets excited about this company, or more excited, is if they start to grow their cash receipts and at the same time not grow their costs at a greater rate. So they grow their cash receipts, remain operational cash flow positive, and potentially increase their operational cash flow. And that's how you get the market excited about the company. That's all I have for this video on DataDot Technologies, the first standalone video for 2022. This is a small company, market cap about 14 million, enterprise value about 12 million, but they are profitable and operational cash flow positive. And there are signs the company might be turning things around. And if they do prove they have turned things around and start to grow revenue at the same time remaining operational cash flow positive, I do think there is a potential future for this company. At this point in time, I'm keeping this company on a watch list. So if I do see signs of the market getting even more excited about this company, and that would revolve around a good quarter report that they will release in January, and at the same time we will see an increase in volume, that could be a good time to take a position in this company. Last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.